Investing refers to the act of allocating money to various financial assets such as stocks, bonds, real estate, and other securities with the aim of generating a profit. The purpose of this video is to provide viewers with 5 essential tips on how to make a profitable investment by understanding key investment principles and strategies. Whether you're a beginner or an experienced investor, this video will provide valuable insights on how to achieve your investment goals and maximize returns while minimizing risks. Understanding the fundamentals of investing is crucial in making profitable investment decisions. Without a basic understanding of key investment principles and strategies, investors may be more susceptible to making impulsive and potentially costly decisions. By understanding the fundamentals of investing, investors can identify and assess investment opportunities, manage risks, diversify their portfolio, and make informed decisions based on their financial goals and risk tolerance. Additionally, having a solid understanding of investing can help investors avoid common pitfalls and maximize returns over the long term. Before we get started on 5 things you need to know about how to make a profitable investment, we'd like to invite you to subscribe to our YouTube channel. You will be alerted when we produce new videos on personal finance, wealth development, and other topics if you subscribe. We appreciate your cooperation and hope you find this video useful on your path to financial success. Therefore, without further ado, let us begin. 1. Start with a clear investment objective. Starting with a clear investment objective is a critical step in making profitable investment decisions. An investment objective is a specific financial goal that an investor wants to achieve through investing, such as saving for retirement or buying a house. Setting a clear investment objective helps investors determine their risk tolerance, time horizon, and investment strategy. For example, a younger investor with a longer time horizon may be more comfortable taking on higher risks, while an older investor with a shorter time horizon may prioritize stable returns and lower risks. By starting with a clear investment objective, investors can align their investment strategy with their financial goals and make informed decisions based on their unique circumstances. 2. Assess and manage risks. Assessing and managing risks is a crucial aspect of making profitable investment decisions. There are various types of risks associated with investing, such as market risk, credit risk, and liquidity risk. Market risk refers to the possibility of losing money due to changes in the market value of investments. Credit risk refers to the risk of default by the issuer of a bond or other fixed income security. Liquidity risk refers to the risk of not being able to sell an investment when needed without incurring a loss. Investors can assess and manage risks by diversifying their portfolio, setting stop-loss orders to limit potential losses, and conducting thorough research before investing in a particular security. Additionally, investors can manage risks by keeping a long-term perspective and avoiding impulsive decisions based on short-term market fluctuations. By assessing and managing risks effectively, investors can minimize potential losses and maximize returns over the long term. 3. Diversify your portfolio. Diversifying your portfolio is a key strategy for making profitable investment decisions. Diversification involves spreading your investments across different asset classes, sectors, and geographies to minimize risks and maximize returns. By diversifying, you can reduce your exposure to the risks of any one particular investment and take advantage of opportunities in different areas of the market. For example, you can diversify your portfolio by investing in a mix of stocks, bonds, mutual funds, and other assets. Within each asset class, you can further diversify by investing in different sectors, such as technology, healthcare, or energy. Additionally, you can diversify globally by investing in companies and assets from different countries and regions. Diversification can help reduce the impact of market volatility and prevent significant losses in the event of a market downturn. By investing across different asset classes and sectors, you can also take advantage of potential growth opportunities in different areas of the market. Ultimately, diversification can help improve your investment returns and reduce risks over the long term. 4. Keep your costs low. Keeping your costs low is an important factor in making profitable investment decisions. Investment costs can include fees, commissions, and other expenses associated with buying, selling, and managing investments. These costs can significantly reduce your investment returns over time, so it's essential to keep them as low as possible. One way to minimize investment costs is to choose low-cost investment products such as index funds or exchange-traded funds, ETFs. instead of actively managed mutual funds. These products typically have lower fees and can help you achieve broad market exposure with minimal costs. You can also reduce costs by investing for the long term and avoiding frequent trading or trying to time the market. Frequent trading can increase transaction costs and potentially lead to capital gains taxes. It's important to compare investment costs across different brokers and investment products to ensure you're getting the best value for your money. By keeping your investment costs low, you can improve your investment returns and achieve your financial goals more efficiently. 5. Stay disciplined and patient. Staying disciplined and patient is a crucial factor in making profitable investment decisions. It's important to have a long-term perspective and avoid making impulsive decisions based on short-term market fluctuations or emotions. Investors can stay disciplined and patient by developing a well-defined investment plan and sticking to it over the long term. This plan should be based on your investment objectives, risk tolerance, and time horizon. By having a plan, you can avoid making reactive decisions and stay on track towards your financial goals. Another way to stay disciplined is to avoid the temptation to chase after hot investments or trends. These investments may offer high returns in the short term, but they often come with high risks and can be unpredictable. Instead, focus on building a diversified portfolio of high-quality investments that can provide stable returns over the long term. It's important to remain patient and avoid making hasty decisions based on market fluctuations or news events. By staying disciplined and patient, you can avoid making costly mistakes and improve your chances of achieving your investment objectives over the long term. The 5 things you need to know about how to make a profitable investment are: start with a clear investment objective that aligns with your financial goals and risk tolerance. Assess and manage risks by diversifying your portfolio, setting stop-loss orders, and conducting thorough research before investing in a particular security. Diversify your portfolio by spreading your investments across different asset classes, sectors, and geographies. Keep your costs low by choosing low-cost investment products, investing for the long term, and comparing investment costs across different brokers and products. Stay disciplined and patient by developing a well-defined investment plan, avoiding impulsive decisions, and focusing on long-term returns rather than short-term market fluctuations. By following these 5 key principles, investors can make more informed and profitable investment decisions and achieve their financial goals over the long term. If you're interested in investing, I encourage you to start by following these 5 key principles. Begin by setting a clear investment objective that aligns with your financial goals and risk tolerance. Remember to assess and manage risks by diversifying your portfolio, setting stop-loss orders, and conducting thorough research before investing in a particular security. Diversify your portfolio by spreading your investments across different asset classes, sectors, and geographies. Keep your costs low by choosing low-cost investment products, investing for the long term, and comparing investment costs across different brokers and products. Finally, stay disciplined and patient by developing a well-defined investment plan, avoiding impulsive decisions, and focusing on long-term returns rather than short-term market fluctuations. By following these principles, you can make informed and profitable investment decisions that can help you achieve your financial goals over the long term. So why not get started today and take the first step towards a successful investment journey? If you found this video helpful and informative, I encourage you to subscribe to this channel for more content on investing, personal finance, and other related topics. By subscribing, you'll be notified of our latest videos and can stay up to date on the latest trends and strategies in the world of investing. Our channel is dedicated to providing high-quality, educational content that can help you make more informed and profitable investment decisions. Whether you're a beginner or an experienced investor, we believe that everyone can benefit from learning more about investing and personal finance. So, if you want to take your investment knowledge to the next level, be sure to hit the subscribe button and join our community of like-minded investors. We look forward to sharing our insights and expertise with you in the future.